What do I always tell you? Hollywood, like any business, is always motivated by money. That's why they do anything. And there is a lot of money in streaming. Oh boy, is there a lot of money in streaming. Especially with the way Hollywood has reimagined it with ads. Oh my goodness. Streaming was the focus of the Warner Brothers Discovery investor call just last week, and sure enough, it was the focus of Disney's today. Not only is streaming generating huge amounts of consistent cash, it's subscriber video on demand, which means, that's why they hate churn so much. But if you play your cards right, it's just a pipeline of money. And as I said, now they're putting ads on it. Netflix is like, oh my God, Netflix swore they'd never do ads. And now they look stupid for not having them, because it's just generating so much revenue. It's incredible. Although, I'll tell you one thing I'm going to say at the end of the video. I'll tell you now. This stuff is so well organized from a business perspective. The only thing that can stop it is if the consumer finally stands up and says no. But this stuff is so compelling, and the content, I think, so fan friendly. Let's see how much it takes for you to say no. I'm not sure where the no line is, but I think there is a no line. I think we're approaching it, but I don't know how quickly. This is tough. We're being really pushed and pulled. The consumers, usually in these things, we always say, who wins in these wars? The consumer. But in this case, I think the consumer is really being pulled left and right, and an awful lot is being asked, particularly in the financial department. Now, also another reason they didn't have a lot of announcements today is that Disney has the Disney Plus Day coming up on September 8th, and then that leads directly into D23 that weekend. So they're saving all of their really big announcements for that 1-2 punch. But that's okay. They gave us a lot to chew on today anyway, and that's that Bob Chapek, whose contract just got renewed for 3 years, is very good at nickel and diming consumers. He's like the face of this whole new thing that they're doing. And again, it's like, at what point are you just going to say no? A big driver of revenue this last quarter, it turns out, was theme parks, for example, where now they're saying 50% of guests are purchasing Genie Plus and individual Lightning Lane passes on top of their regular ticket prices. So that's obviously boosting revenue. Now, I've heard people from the consumer perspective say that it's insufferable without Genie Plus, that it's impossible to now I think there's a lot of fighting going on in the parks these days, and Disney blamed it on I believe, like they said, like undesirables or lower ticket prices in some areas, which is like pretty low. But I think they're making people angry. I think they're creating a class system within their park, and people spend a lot of money no matter what to go to Disney, and nobody likes to go to Disney World and spending a lot of money to do it, and then when they get there, find out that they're still in the lower tier. So that's on Chapek, and I think that's one of the reasons you're seeing a little bit more anger and frustration in the parks. And also the world's just lost its mind right now, but I think that's part of it. Now, I'll have more to say about the nickel and diming at the end of this video, so put a pin in that. But right now, we're focusing on streaming. And now, Disney is leading the way when it comes to having an ad tier in your subscription video on demand service. That's right, Netflix might have started this game, but now it's Disney's ball. And they just passed Netflix in global subscribers, thanks to Netflix losing some, probably to Disney Plus. So off the last upfront, for those of you who aren't familiar, we covered them. Upfronts usually have some announcements, particularly if it's Disney. Disney is very good at this. So at all these presentations, they're like a really good slick machine at this point. And it's funny to watch the other studios try to catch up. And they're used to giving business presentations, but I think Disney has mastered doing a B2C presentation, which is business to consumer, where consumers will sit in on these calls and get really interesting information out of it as well. All right, so anyway, the last upfront, where networks and now streaming services will pitch to advertisers to sell ads for the coming year, Disney sold the most ads with, what do you know, for $9 billion with a B. They sold $9 billion worth of ads generated from that one event. 40% were for, by the way, I heard that was like a horrible spreader event for COVID, the entire upfronts. And it was the first time they were in person again this year. They were like, we're going to have them in person, everybody. And they gave everybody COVID. All right, so anyway, 40% of that $9 billion was for streaming/digital. And also sports, it turns out, is a huge revenue driver. So if your portfolio doesn't have sports in it, you're missing out. You're losing money. So also this points to the size of the Disney empire. They have multiple channels, including a network, ABC. So only 40% is going to streaming digital, and that means they have the other 60% of that $9 billion is going to all those other areas. So the Disney empire is vast. All right, then NBC Universal, that's Comcast, came in second with $7 billion, $1 billion of which went to Peacock, which just goes to show how big their empire is and how reliant it is on traditional, content delivery, network TV, etc. And then also NBC has a vast amount of cable channels. And then Warner Brothers Discovery. Warner Brothers used to be part of Time Warner, and it used to have a lot of cable channels. That's not really the case anymore. But Warner Brothers Discovery had $6 billion, at least I don't believe. But Warner Brothers Discovery had $6 billion. They came in third place. Now Netflix has no ad tier. They're not getting any of this money. They weren't at the upfronts because they don't sell ads. And they swore at one point they never would. But once their subscription numbers hit a brick wall and started to actually go backwards, well, they're putting an ad tier together pretty quickly. And we'll probably be participating at next year's upfronts, and I'll be curious to see what their ad sales are. All right, now, but that $9 billion in ads isn't enough additional revenue for Disney. It's not all additional. They sell ads every year, but now they've opened up Disney Plus to being something that they're selling ads on. And everybody wanted in on that. If I were an advertiser, I definitely want to sell ads on Disney Plus, for sure. They want even more money. They want your money. They want your money by raising the price of Disney Plus. Now, usually when any kind of service adds a version with ads, it's cheaper. They come in and they say, this is less money. And the idea is to entice other people who maybe didn't have it before, or maybe people who are churning. They're like, oh, look, it's cheaper. Come over or, drop down so you don't leave. But Disney's not doing that. They're taking the current price of $7.99 a month, which we knew was too good to be true. When it launched, it was like even cheaper. It was ridiculous. I think I got mine at 3 years at $4.99 a month or something when it first dropped. It was fantastic. But anyway, starting December 8th in the United States, and then obviously rolling out to all the other spaces, they're making the $7.99 the ad version. So you can't just stay the way things are, right? You would think that you would just, if you want to stay the way things are, keep paying the current price, or you could drop down to the ad tier version. No. You're going to be automatically dumped into the ad version on December 8th at $7.99, unless you maybe get the annual plan and get legacied in. So you might want to sign up for that today, or in November. It'll be curious to see when they stop offering that. Or if you're month to month, starting then, you're going to that's what's going to happen. So I think what must be the case is that Disney must feel they already have so many subs. They have more than Netflix, and they see what happened to Netflix. They're like, there is no room for growth. There are no subscribers to pick up. What we need to do is to monetize. We need to create tiers within the subscriber base that we already have. So we need to take a chunk of the subscriber base that we already have that really hates ads more than they hate paying $3 extra a month, and move them up to the $11, oh man, that hurts. Even just saying it, to the $11 a month price. That's what they're going to do. So they're going to raise the price of people who already subscribed instead of attracting new customers. Whew, again, I understand where they're coming from. I'd give it a shot too, but the question is, at what point does the consumer say no? All right, so, and how bad are the ads? They haven't really gone over that yet. They haven't talked about where the ads will be placed. Will they only be pre-roll? That wouldn't be so bad. How many? They said starting at launch, there will be no ads on kids or preschool programming, but they specified at launch, which means they're probably going to add them in later. But people use, again, Disney Plus as a babysitting service, so to have ads run in front of someone who isn't supervised, I could see how that would be considered problematic. But if people are leaving kids unsupervised in front of network television, what's the difference? So, let's see. All right, so anyway, Disney Plus is currently $7.99 a month. Starting December 8th, that will be the price with ads. If you want to have no ads, you got to pay $10.99 a month. Hulu, starting even earlier on October 10th, will go to $7.99 with ads, $14.99 without ads. That's a $2 price increase. The bundle, if you want the bundle, and they have so many options. It's going to be crazy deciding what you want on this. Talk about an a la carte menu here. All right, so if you want, so the bundle is Disney Plus with Hulu. There is a Disney Plus Hulu version, but that's okay, I put it up there, but we're not going to just go over it talking. So if you want Disney Plus, Hulu, and ESPN Plus, which apparently always has ads, If you want the whole thing with ads, it's $12.99 a month. If you want Disney Plus with no ads, but you're willing to watch ads on Hulu, this is ridiculous. But I guess it saves you, it saves you $5, so I guess it's not that ridiculous. And then ESPN on top of that, it's $14.99. But if you want no ads across the board, except for on ESPN Plus, it's $19.99. Then, if you want to factor in live TV, which is something unique to the Disney bundle, to Disney, that's something they offer through Hulu. And, Warner Brothers doesn't have that option. Warner Brothers Discovery can't offer you live TV. But it's pretty freaking expensive. If you want ads, it's $69.99 a month. If you want Disney Plus no ads, but ads on Hulu and your live TV, it's $74.99 a month. If you want no ads at all, except apparently on ESPN Plus, and is that no ads on live TV too, which would be incredible? That's $82.99 a month, which is really expensive, and that doesn't include your internet service. So my God, as many of you are saying, we're back in cable territory. Now, Disney Plus added, or Disney, the whole Disney streaming empire added 14.4 million subs this last quarter, which is much better than the 10 million that Wall Street was expecting. They're up to 152.1 million subscribers for Disney Plus, or in the United States, I think, but it's a little bit sketchy how it breaks down. They're 221.1 million subs everywhere across the globe. And Netflix dropped down to 220.67. Oh, that sucks for Netflix. Although that's why, because Netflix is dealing with churn. Although don't expect Disney to stay at this number. They know they're going to drop because they're losing the rights to cricket in India. So they expect, and I think Viacom got the rights. There was a bidding war and Disney said, too rich for my blood. See, Disney has a no point. And so they lost the cricket rights in India, so they expect their international numbers to go down. Netflix pricing is, just for comparison's sake, is $9.99 for one screen, no HD. How many screens you can watch you can watch at once, which is basically for how many people you can share the account with. It's $15.49 for 2 screens a month with HD. And then if you want 4 screens a month, which I believe is the plan that most people have, it's $19.99 per month, which is a match with no ads across the board except for ESPN over on the Disney bundle. So do you think that's equal in terms of value? I guess there's sports in there. Netflix does not have sports. So I would like to add that Disney is a very unique company with unique experiences. They have theme parks, cruise ships, they have sports. It's a big part of their empire, as you can see. They talked about another way to nickel and dime you. They're going to add betting. They're going to add sports betting to ESPN soon. They're trying to figure out how to do that. I think it's not a great fit with the Disney brand, but Chapek says in today's call that they've discovered that for the under 30 consumer, when it comes to sports, they don't want to have a platform where they can't also bet on what they're watching. I don't know. I guess, talk about nickel and diming, getting into the collection business too. I don't know, Bob. We'll see what they decide to do. But that takes nickel and diming to a whole nother level. What is their next quarterly report going to be when that happens? This is what we've earned. But then when you factor in what we're owed and have yet to collect, this is what we also have. And you're like, what? There are going to be a lot of funny Disney memes and jokes coming out of that if they actually do that. Chapek and his team, though, to their credit, on the call, were very confident, very relaxed, and very knowledgeable. They fielded questions really well. They were ready with quick, meaningful answers with data to back it up. We'll see what happens to the stock tomorrow when trading starts again, but I think the company seems strong. And just the real question continues to be, where is the line with customers that just can't take it anymore, who will finally say no? And I think it's a very hard thing to do to Disney to say no, as Disney is a way of life because so many of their things are immersive. Theme parks, cruise ships, the Disney store even. That's a part of your life. It's more than just something that you consume. And then also, nobody's competing with Disney, which I continue to find absolutely shocking, that nobody is. People stick a toe in there and they have a theme park land here and there, an immersive experience here or there, but they do not try to even start to build anything close to what Disney has. Everybody jumped on Netflix's bandwagon. Why won't anybody jump on Disney's? I guess because it's a little, I don't know, it's very expensive to be Netflix, as you're seeing. So it's crazy to me that particularly studios with, I guess Universal has theme parks, but still, it's just not quite the same. I still continue to believe that Warner Brothers Discovery is the only studio that could maybe compete with Disney on par, and they just will not do it. In fact, they're tightening their belts over there. It's crazy. All right, if you don't want to go to a Disney theme park, you just have to go home. That sucks. All right, so that's the breakdown of Disney's Investor Day and just how the business is changing. Share your thoughts down below and what you think you might do, although I don't blame you if you need to think on it. That's why there's churn. People are thinking about it every month. So share your thoughts down below, subscribe today, and of course, as always, you can check out some more videos right now.